Welcome back, number nerds. We're going to put on our financial detective hats today. We're diving into India Cements Limited, got their Q3 FY25 results hot off the presses, along with some reports. This is not your typical quarterly checkup.
No, it's not.
This is going to be a good one.
It's a really interesting deep dive because of the big change at India Cements.
Yeah.
They're a subsidiary of Ultratech Cement now, as of December 24th, 2024.
Right.
Huge company in the industry, part of the even bigger Aditya Birla Group. So these results are our first peek behind the curtain, seeing how this new partnership is actually playing out.
Okay, so maybe a little bit more drama than your average balance sheet then. Let's start with the top line figures. Consolidated net sales are down year over year, coming in at 940.81 crore rupees, compared to 11,144.46 crore rupees the same quarter last year. Standalone revenue also took a hit, down to 903.16 crore rupees from 1,081.88 crore rupees. Not exactly a triumphant entry into the Ultratech family, is it?
Well, not the most exciting start, that's for sure. But it's important to remember the overall economic climate in India. It's been a bit sluggish lately.
Right.
So that plays a role.
Right.
That said, one bright spot is the sales volume. Actually increased 5% year over year on a consolidated basis. There's this push and pull between external factors and their internal performance. And we've got to untangle that.
We've got to untangle it, yes. And here's where things get really curious. The consolidated profit before interest, depreciation, and tax PBIDT is actually negative. We're talking a negative 143.73 crore rupees.
Okay.
But hold on. The consolidated profit after tax, PAT, is a positive 196.22 crore rupees. That's a massive jump from the measly 0.67 crore rupees they reported in the same quarter last year. Help me out here, because those numbers seem to be telling two different stories.
You're right to be puzzled. This is where understanding the fine print is crucial, and it all comes down to those sneaky little things called exceptional items. These are one-off events that can have a big impact on a company's bottom line, and they're definitely at play here.
Okay, so exceptional items. They sound a bit like those random charges on a phone bill that you never quite understand.
Yeah.
Break it down for me. What are these exceptional items in India Cement's case, and why are they making such a difference?
All right. Let's start with the consolidated picture. The reports show a big 584.23 crore rupee profit from the sale of investments.
Wow.
That's a one-time gain. That's artificially inflating that positive PPT we see.
Okay.
It's like finding a treasure chest in your attic. A nice surprise, but you can't build your long-term financial plan around it.
So the consolidated side is sort of propped up by this one-time windfall. What about the standalone financials? They were still in the red, right?
Yes, the standalone business wasn't exactly thriving this quarter.
Yeah.
But even there, we see exceptional items at play. There's a 190.26 crore rupee credit, mostly due to what's called impairment of assets.
Impairment. That doesn't sound like a good thing. Is this where I start panicking?
Don't panic yet. Think of it like this. Imagine you bought a top-of-the-line espresso machine for your office. But now, everyone's switched to tea. The value of that espresso machine has gone down, right? You have to adjust its worth on your books. That's impairment. In India Cement's case, it's mainly from writing down the value of assets that they're planning to sell, as well as some provisions for inventory that they haven't been able to move.
Okay, so it's not necessarily a sign of disaster, but more of a reality check on what some of their assets are actually worth.
Exactly. And it's a crucial point for anyone looking at a company's financials. Don't just glance at the bottom line. You got to dig deeper. Understand what's driving those numbers, especially these exceptional items.
Okay, lesson learned. Always check the fine print. Speaking of things that seem too good to be true, the reports highlight a significant drop in net debt to 886 crore rupees. That's got to be a positive sign, right?
Absolutely. Debt reduction's a healthy move. And it likely has something to do with the Ultratech acquisition. When a financially strong company like Ultratech comes on board, it often means better credit terms, access to cheaper financing. And guess what? India Cements even received a credit rating upgrade to AAA, a sign of increased financial stability.
Shiny new credit rating.
Yeah.
Maybe this merger is working some magic after all. But let's not get ahead of ourselves. Let's dive into the operational side of things. What kind of insights can we glean from these reports?
One key metric that jumps out is capacity utilization. During Q3, India Cements was operating at 57%. Think of it like this. They have a factory that can make 100 widgets, but they're only making 57. That tells us they're not firing on all cylinders. Could indicate weaker demand in the market or maybe some challenges integrating with Ultratech's operations.
So even with that domestic sales increase, they're leaving a lot of potential on the table. Is this a sign of trouble brewing or just a temporary blip?
It's too early to say for sure. It could be a mix of factors. Sluggish economy, typical seasonal fluctuations in demand. What we need to watch closely is whether this lower capacity utilization persists in the coming quarters.
Right, right. All right, fair enough. Now let's address the elephant in the room, the Ultratech acquisition. Their press release is overflowing with optimism about synergy benefits, talking about new systems, cost optimization, wider distribution network. It all sounds impressive. But how might these actually play out in the real world, impact their future financials?
Well, that's the million-dollar question, isn't it? The potential for synergy benefits is definitely there.
Yeah.
Ultratech has a reputation for running a tight ship, has a vast distribution network. By bringing India Cements into the fold, they could unlock cost savings, reach new markets. But are we just dying into the hype? How can we be sure they'll actually deliver?
You're right to be a bit skeptical. Those synergy benefits sound great on paper, but we need to see the proof in the pudding, as they say. So if everything goes according to plan, we could see this acquisition breathing new life into India Cements. But what does Ultratech's ownership mean for their long-term strategy? Will they continue to operate as a separate entity, or will we see a full-blown merger down the line?
That's something we'll have to wait and see. The press release is pretty vague on the long-term integration plan. Ultratech has a history of both fully absorbing acquired companies and allowing them to operate with some degree of autonomy. It really depends on the specific circumstances and their strategic goals.
So it's a bit of a wait-and-see game for now. But one thing is clear. India Cement's Q3 FY25 results are a mixed bag, a real financial puzzle. Declining revenues, a negative PBIT that makes you scratch your head, but then a surprisingly positive PT, all thanks to those one-time gains from selling off assets. And of course, we have the looming presence of the Ultratech acquisition, which brings both uncertainty and potential in equal measure.
You've summed it up perfectly. It's like we're piecing together a puzzle where some of the pieces are still missing. We have these intriguing glimpses into their financial performance, but we need more time to fully understand the long-term implications of this new chapter for India Cements.
Okay, so let's step back for a second and think about what this all means for our listener, who might be wondering why they should care about these numbers and the intricacies of accounting adjustments.
It's all about understanding the true financial health of a company and being able to make informed decisions. Whether you're thinking about investing, sizing up the competition, or just fascinated by the business world, having a clear picture of the underlying trends and drivers is essential. These reports can be dense and technical, but they hold valuable insights if you know where to look.
You're preaching to the choir here. I practically dream in spreadsheets. But you're right, it's easy to get caught up in the headline figures and miss the real story hiding in the details. That's what we're all about here at The Deep Dive, helping you cut through the noise and get to the heart of the matter.
Precisely. And in this case, it's particularly important because of the Ultratech acquisition. This is a major development that will shape the future of India Cements. And understanding these initial financial results is the first step in understanding the long-term trajectory.
So, what should our listener be paying attention to in the coming quarters? What are the key things to watch for as this story unfolds?
First and foremost, keep an eye on how those synergy benefits from the Ultratech acquisition materialize. Will we see significant cost reductions? Will India Cements be able to expand its market reach? Those are tangible indicators of successful integration.
And of course, we need to continue monitoring the top-line growth or lack thereof. Is that revenue decline a temporary blip due to external factors, or is it a more concerning trend? And how does it compare to the performance of their competitors in the industry?
Another crucial aspect to watch is capacity utilization. Will they be able to ramp up production and operate closer to full capacity? That will give us valuable insights into the demand for cement and India Cement's ability to capitalize on it.
And of course, debt management remains critical. Even though they've made significant progress in reducing debt, it's important to see if they can sustain this trend and maintain a healthy financial structure.
Right. And finally, keep an eye out for any announcements regarding the long-term integration plan with Ultratech.
Yeah.
Will they continue to operate as a separate entity? Will we see a full-blown merger? Those are strategic decisions that will have a major impact on the company's future.
So much to watch for. India Cement's Q3 FY25 results have given us a lot to think about, haven't they? We've uncovered some interesting trends, some puzzling figures, and a whole lot of potential thanks to that Ultratech acquisition.
Indeed. And it's a reminder that financial analysis is never just about crunching numbers. It's about understanding the story those numbers tell and what they mean for the future.
Well said. But before we wrap up completely, I have one final, slightly provocative thought to leave our listener with. You're right to be a bit skeptical. Those synergy benefits sound great on paper, but we need to see the proof in the pudding, as they say. So if everything goes according to plan, we could see this acquisition breathing new life into India Cements. But what does Ultratech's ownership mean for their long-term strategy? Will they continue to operate as a separate entity, or will we see a full-blown merger down the line?
Yeah, that's the big question, isn't it?
Hmm.
The press release, it's pretty vague on the long-term integration plan. Ultratech, they've got a history of both absorbing companies completely and letting them operate on their own, you know. To a certain degree, it really all depends on, the circumstances and their strategic goals.
So we'll have to wait and see on that one. A bit of a wait-and-see game. But shifting gears a little bit, thinking about our listener out there, they might be thinking, okay, interesting numbers, but why should I care about this? What's the takeaway for someone who's not a financial analyst, someone who wants to understand what's really going on here?
Well, at the end of the day, it's all about understanding how financially healthy a company is and then being able to make smart decisions. So whether you're a potential investor or you're, maybe sizing up your competition, or even if you're just curious about the business world, getting a good grasp of these, trends and these drivers, it's essential.
Yeah, financial reports, they can be a bit intimidating, but they actually do offer a lot of valuable clues if you know where to look.
You're telling me I practically live in spreadsheets. But seriously, you're right. It's easy to get kind of lost in the numbers and miss the bigger picture. That's what we're all about here at the Deep Dive, helping you cut through all that noise and get right to the heart of the story. Exactly. And in this particular case, this Ultratech acquisition, it adds another layer of complexity. It's a big turning point for India Cements. And these first financial results, they're just the first chapter in what will be a longer story.
Okay. So as the story unfolds, what should our listener be paying the closest attention to? What are the key plot points to watch for?
Well, I think the biggest one is how those synergy benefits actually materialize. So will we see real cost savings? Will India Cements be able to, get into new markets, reach more customers? Those are the real tangible signs of a successful integration.
Yeah, for sure. And of course, we got to keep an eye on that top line growth or lack thereof. Is this revenue dip? Is it temporary? Is it just because the economy's, a little bit slow right now? Or is it a more worrisome trend? And how do they measure up against their competitors?
Right. Another crucial aspect is that capacity utilization. Will they be able to increase production and, get closer to operating at full capacity? That'll really give us some good insights into the demand for cement and, whether India Cements is in a good position to take advantage of that demand.
Yeah, and of course, we can't forget about that debt. They've made some good progress in reducing it, but can they keep that going? Can they maintain, a healthy
Yeah.
financial structure over the long term?
That's right. And finally, any announcements about their long-term plan with Ultratech, their integration plan, are going to be, super important to watch for. Are they going to keep operating as a separate entity, or are we going to see a full-blown merger at some point down the road? Those are strategic decisions that are going to have a big impact on their future.
Yeah. Yeah, a lot to keep an eye on, a lot to watch for. Well, India Cement's Q3 FY25 results, they've definitely given us a lot to think about, haven't they? We've uncovered some interesting trends, some puzzling figures, and a whole lot of potential thanks to that Ultratech acquisition.
Yeah, definitely. And it's a good reminder that financial analysis, it's not just about, crunching the numbers. It's about really understanding the story behind those numbers
Mm.
and what they could tell us about what might happen down the road, what the future holds.
Well said. Well said. But before we wrap things up completely, I have one final thought, a little bit of a cliffhanger to leave our listeners with. We've talked about synergies and cutting costs and all that good stuff. But is this Ultratech merger, is it a true lifeline for India Cements? Or are we just putting, a fancy bandage on a much bigger problem? That's what I'm kind of grappling with here.
That's the question, isn't it? And honestly, it's too early to say for sure. Remember that 57% capacity utilization we talked about? It's like having a sports car and only driving it around the block. Sure, their sales in India are up a bit, but they're really leaving a lot of potential untapped. What do you think about that?
Yeah, it's not exactly inspiring, is it? Maybe they're just being cautious while they figure out this whole integration with Ultratech, or maybe maybe the demand just isn't there. What are your thoughts?
It's probably a combination of things. The economy, it's not exactly booming right now,
Hmm.
and that could be affecting how much cement people are buying. Plus, there might be some growing pains as India Cements is trying to adapt to Ultratech's way of doing things. I think what we really need to watch for is whether this low capacity utilization keeps going. If it does, that could be a red flag. Could be a sign of bigger problems.
Yeah, and even though they've reduced their debt, which is good, that's partly because Ultratech has, strong financials. They've got that muscle. Can India Cements keep that financial stability going on their own in the long run? It makes me wonder if they're, maybe a bit too reliant on their new parent company. What do you think?
That's a good point. It's easy to get caught up in the excitement of a merger, right? But the real test is whether India Cements can thrive on its own, even with the support from Ultratech.
Okay, so for our listener out there, maybe they're stuck in traffic, maybe they're trying to, figure out their own investments. What's the big takeaway from all this? What should they be watching for as the story continues to develop?
I'd say pay attention to the real, concrete signs of progress. Look for evidence that those synergy benefits are actually happening. Are they really cutting costs? Are they gaining market share? Is that capacity utilization going up? Don't just take the press releases at face value. Dig a little deeper. Look at the numbers. See if the reality matches the hype.
Solid advice. And remember, this is just the beginning, this deep dive. You've got the tools now to analyze these results yourself. Keep an eye on those key things we talked about, and you'll be able to, draw your own conclusions about what the future holds for India Cements.
Absolutely. Think of it like detective work.
Yeah.
You got to piece together the clues to uncover the real story.
Well, we've definitely uncovered some intriguing clues today. It's going to be interesting to see where this investigation leads us.
Indeed it will. And until our next deep dive, keep asking questions, keep digging, and keep those financial statements handy.
You got it. And that's a wrap on our deep dive into India Cement's Q3 FY25 results. As always, we encourage you to, go check out those source materials yourself. Take a look. There's a ton of great info in those financial statements and press releases. It's worth the effort to understand all the little details.
Yeah, and remember, being informed means going beyond those headlines, forming your own opinions. We've given you the tools. Now it's your turn to analyze, interpret, and make sense of this, complicated but really interesting world of finance.
You couldn't have said it better myself. Until next time, keep learning, keep asking those questions, and keep diving deep.